Thank you for tuning in to MacroView Television. This is the Taiwan Outlook, and I'm your host, Wu Ruiguo. There's been a lot of progress and new developments in cross-strait economic relations, with the likely signing of the financial MOUs and also the Economic Cooperation Framework Agreement, or so-called ECFA. There's bound to be expanded economic interdependence between China and Taiwan. On today's program, we're delighted to have Professor Philip Xu, Associate Professor of the Political Science Department at the National Taiwan University, to be our special guest to discuss those issues and much more. Philip, welcome to the Taiwan Outlook.
Thank you, Raymond. Hi, everybody. I'm Philip Xu. I'm the Associate Professor of Political Science at National Taiwan University. And it's my pleasure as well as honor to be on this program.
Well, it's a pleasure is ours to have you here on the program. Philip, let's start off with the economic relations between China and Taiwan. We understand the overall relationship, in cross-strait relations in the past year has been a lot of changes, a lot of progress, especially in the economic domain. How would you then tell with us that with the likely signing of the financial MOUs, between China and Taiwan, how would that impact economic relations between the two sides?
I think the area of finance is really a cornerstone for the overall economic activities between any two national economies,
yes,
including Taiwan and China. Especially, it is a sort of a pipeline for boosting the manufacturing industries.
Yes.
We know that we have a lot of Taiwanese investors in China, primarily engaging in manufacturing industries. And the financing needs of these Taiwanese investors in China has been a long-term problem in the cross-strait relations in the past 2 decades or so. So I think, among other things, the financial MOUs across the strait would really satisfy their financing needs.
And we understand the financial MOUs will cover 3 sectors, specifically banking, stock brokerage, and also insurance.
Yes.
How would you think that among the 3, how would the market, reciprocal market access, the issue, because China is so big and Taiwan is so small, how would that issue be resolved in terms of achieving equality between the two sides?
Let me start with the financial MOUs per se.
Okay.
As far as we understand the nature of financial MOUs between most economies, it is primarily agreement based on basic principles that governs the investment and insurance and the banking activities across economies. But to what extent the asymmetric interdependence, as you have mentioned, can be resolved really depends on the subsequent detailed regulations after the signing of the MOUs. And I believe that there have been a lot of discussions in Taiwan on the part of our government as well as our insurance finance industries regarding whether there would be simultaneous reciprocity as well as appropriate sort of regulation for the mainland investments in Taiwan.
Okay, and we understand financial MOU by definition supposed to benefit the financial industries on both sides. Which side, in your opinion, will benefit more from the signing of the financial MOU? Although we don't know exactly the contents of the MOU yet, but just in terms of the skeleton structure, how would you think it will benefit which side more?
My inference would be that perhaps the Taiwanese industry would benefit relatively more than their counterparts in China. And this is primarily based upon the current initial conditions of the cross-strait financial exchanges, and also based upon the relative clout of the industries across the strait in terms of their global market share. We know that because of the relatively small size of Taiwanese economy, including the finance industry, so that our banking and insurance and securities industries are in dire need for a greater market to expand their businesses. Whereas it seems that the domestic market of China by itself has been, essentially adequate for many of these businesses, operations for these industries in China.
Yes.
So, and we know that, in terms of the bilateral MOUs, the increment for the Chinese businesses is going to be limited, whereas the increment for the Taiwanese business is going to be much more larger, much larger. So I think we are probably going to be a greater beneficiary.
Okay,
Yes.
in terms of the financial MOUs.
Yes.
And we also know that financial MOU, of course, will open up the market access into the Chinese domestic market. And we also know that as far as the business community in Taiwan is concerned, most of the people are looking forward to the signing of the MOUs. But however, there are also differing opinions, views within Taiwan. I think one of the persistent perspective that you've been hearing is that are we overly dependent on China, especially now with the market access almost completely open for the flow of capital, for the flow of personnel. Do you think that such a worry or assessment is justified?
Let me state the fact that deepened economic interdependence is an inevitable result of deepened economic exchanges across any two economies. So that concern, based upon the reality, I think is legitimate. However, I think there is another dimension for this concern, which is that whether this asymmetric interdependence would really increase the political risk for Taiwan as a whole. And on that dimension, I think there can be a lot of things that we can do to minimize the risk, such as to install effective regulations for incoming Chinese investments, whereas we do not violate the principle of reciprocity. And also, I think, for example, even though the overall interdependence will increase, we can also focus on the control of the interdependence or the reverse asymmetric interdependence. That is, to have China dependent on Taiwan to a large extent than the other way around in some very specific sectors within the overall financial industry. So that's something we could think about.
One thing, of course, that people are concerned about is that our financial institutions are entering into the Chinese market relatively late, because there are many foreign banks that are already operational on the mainland, including banks from Hong Kong and Macau. So how can we compete and compensate for our late entry into the Chinese market, even though I agree with you 100% that the Chinese market is, holds a lot of potential for the growth of Taiwan's financial institution. But how can we compete with others that already have a foothold in the Chinese market?
Yes, indeed. I think that's a very important question, and that's related to how justifiable it is to allow for our industry to go there. As far as it goes, I can see at least two possibilities in the current reality to boost our competitive edge. The first is to form some sort of a joint venture or business partnership between the Taiwanese banks and their collaborators within China. And I believe this is partly the pursuit that has been undertaken by the Taipei Fubon Bank and their collaborators, especially as far as I know, in Guangzhou. So with that kind of collaboration, it's easier to get access to the market, and it'll enhance their leverage to ride on the already established pool of customers. So that's one of the possible strategies. The other, I think, is really the affinity, the similarity, the homogeneity between the cultures, languages, and even thinking styles and behaviors between China and Taiwan. In that regard, I think Taiwan enjoys a competitive advantage over most of the international operators in China. And especially, I think, we Taiwanese have been traditionally proud of the quality of services within this economy. Especially within financial service. I think it's probably not too unreasonable to suggest that perhaps, except for Hong Kong, we are also quite competitive compared to most other service-based economies. So that would be the two possible strategies. And what are the aspects that, Philip, you think our public should pay attention to in terms of the financial MOUs? We already talked about Taiwan's late entry, and you also mentioned about the pool of Taiwanese businesses that are operating in the mainland already. What are the aspects of the MOUs that we should be, watch out for? I think one of the possible facets we should pay attention to is, as I mentioned, to what extent you can strike a balance between the regulation of incoming Chinese investments and also the pursuit of efficiency for this investment.
Right.
You don't want to stifle, the business opportunities for this incoming Chinese investment.
Of course.
Because it's not only for their sake, but, the ultimate intention for introducing these investments is for our society as a whole.
Yes.
And I believe that there are certain sectors that you can allow for these investments, which does not dampen or compromise the economic security of Taiwan too much.
Okay. All right.
The other dimension, I think, is also to pay attention to the fact when our securities and banking industries sort of land in China, they would not exhaust or absorb too much the capital or the capital formation within Taiwanese societies. So that's another issue that the government should pay attention to.
Okay,
yes.
Good. Well, I want to thank Professor Philip Hsu for giving us this overall general overview of the latest developments in cross-strait economic ties. We're going to take a short break. We'll be right back to the Taiwan Outlook, and we'll continue this conversation with Professor Philip Hsu of the National Taiwan University. And next, we're going to talk about ECFA, Economic Cooperation Framework Agreement between China and Taiwan. We'll be back in 3 minutes.